But now let's bring in Scott Bauer, CEO of Prosper Trading Academy, to help make sense of what's going on. Scott, no major numbers here at the bottom of the hour, but I am curious sort of what's your take here of this overnight action that's been here, a little bit of momentum. You know, I'm wondering is there any number that's coming up? Is that JOLTS number going to move the market, or is really the market digesting the data and information it got yesterday?
Yeah, I think the market is really trying to settle in here and is really trying to process everything of what may happen, you know, with this vaccine, which is why you see, and I don't want to call it a rotation yet, JB, but it's why you see the small caps really big up, like you just talked about. And there's a bunch of the Dow stocks that are flying higher, no pun intended, Boeing being one of them, kind of carrying the Dow, and the S&P is higher, but that, you know, sell-off, if you will, in the NASDAQ space. And that's why we're seeing that much weaker. And you look at the FANGs especially, but then a lot of the other tech stocks that have been, you know, the stay-at-home names that have been selling off. So I'm not calling it a rotation yet. I'm not calling it, you know, throw the NASDAQ out yet. I think this is actually an opportunity, quite frankly.
Yeah, well, we're going to be hitting that in my next chart of the day because I definitely agree with you. I think there's been a little bit of sometimes that overreaction in the marketplace. Yeah. Listen, positive news is positive news, but we always talk about it. Don't chase the news. You know, you always want to make sure you're looking there at it. But I want to look into one area that I thought was a really interesting move yesterday, and it's the treasuries. And I know that you always have a focus when it comes to the treasuries. I was looking there, you know, specifically at the 10-year, had a nice little pop up almost to 95 basis points, almost it touched 97.5. That was the largest or highest level, I should say, since March 20th, which, as you think back, that's sort of where we started all along. Yep. So my question is, are we happy that we're back getting closer to 1% on the 10-year, or is this just a small term pop that's occurring and we need to really kind of brace for what could be some sell-off here?
So I think the move back is actually a good one longer term, but for the health of the market, we don't want to see these big moves. We want to see slow, methodical moves in one direction or the other to really put some conviction behind it. So the fact that, you know, the 10-year, as we've seen over the last week since the election, has gyrated literally from almost 1% down to back, you know, 7.2 or 7.3 when the night of the election, and now back up to 0.1. The market, that's a little instability there. Again, longer term, I think rates right here, I think that's a great thing for the market. But we want to see this settle in a little bit here. So I'm kind of fading this market right now as well, JB, just like kind of what we talked about, you know, those knee-jerk reactions even with the NASDAQ right now. I'm fading this right now.
No, that's interesting, Scott, because as I've been looking there and kind of watching the treasuries, this has been an interesting movement over the last, I would even say, month or so. And so as I've been watching its move there, in some ways, my question for it is, has this weak dollar now started to contribute to some of this? And is this sort of an opportunity for the dollar as people interested in buying it? Or is there really more weakness that's there available? And the reason I ask that is yesterday you had gold plummet, but the dollar really didn't move. And so, and then we're kind of seeing that opposite move here today. Curious on your take there.
Yeah, and that's so important to point out because the dollar in the commodity space has been so highly correlated in an inverse relationship for the last 6 months or last year, quite frankly. And so I think the move that we saw in gold yesterday, it kind of detached itself from the dollar and really was correlated more with the bond market and the equity market, of course, on the big move up. I wouldn't say that there's that correlation is going away. I think, the last day, and maybe we're going to see this over the next week, maybe that's a little bit of a one-off. So I think that the dollar and gold especially are going to start really, kind of moving in tandem again with one another, again, in an inverse relationship. However, specific to the dollar, this thing has traded in such a tight range for 6 months, or I shouldn't even say tight range, a very defined range for the last 6 months. And we're getting down closer to that bottom end here where we may see a little bit of strength, but that it's hard to fight that range, JB. And gold selling off the way it did yesterday, I think was more a reaction to the overall news on the vaccine and the overall market, and not really because of the dollar whatsoever.
So that's interesting because as I kind of flip and look at gold, that was where I really wanted to go next because, I mean, That was a hard sell-off, post that. I mean, it went down 5%, almost 5%, I should say. And so I guess that's my question. We've seen the sort of reversal here this morning, right? We're pushing back up. Now, we haven't recovered, but I guess to my point there, or a question you were kind of raising, is what is it for gold here? It's been kind of this interesting trade the whole year. Kind of people piled in right off the bat, drove it way up. It's sort of sold off here. It sort of feels like directionally, it's sort of in sort of this no man's land. It's sort of found its sort of happiness. It just seems to have some big jagged moves, to your point earlier, where sometimes you don't want to see that in the market, those big sort of extreme moves to the upside and the downside.
No doubt. And I think what people didn't forget, but what kind of maybe got put on the back burner here is all the stimulus talks again, because there's so much else going on right now. And the bottom line is, in my opinion, there is still going to be some level of stimulus, whether it happens this year or early next year. There's going to be some level of stimulus, which should be a good thing for gold. Interest rates, and we've been talking about the 10-year here. The Fed is not changing their policy on interest rates anytime soon either. So those are two things that really should be some major support for gold, whether it's here, whether it's $30 lower around the 1830, 1840 level. Those are some major backstops for the gold market here. So I really think, if someone's looking to find that range in gold or to trade in gold here, you probably have to lean towards the long side just because of those backstops.
So I want to keep in the metal side there and go over to silver, and we have it up here on the full screen here, because silver's been quite an interesting mover, been a really popular retail trade over the last couple of months here. But I mean, when you talk about getting hit, it went down 7.3% yesterday. So, but we're seeing a little run back here. Do you feel like the correlation between gold and silver will kind of continue? But the reason why I'm asking, I put a but there, is silver has a little bit of a, lack of a better term, silver lining, sorry for the pun, because it has a manufacturing use. And if that starts to pick up, can that be a little bit more bid for silver?
Well, I think we saw that earlier in the year on that big, massive rise, in the metals that we saw, and specifically silver. I think that was because of things picking up in China, the economic numbers picking up, and that was before this latest unfortunate, let's call it second wave worldwide of COVID. And so, to your point, yes, if we get this vaccine and it's something that is realistic in the next 3, 6, 9 months, even, yes, we should see economic activity picking up worldwide, specifically overseas and in Asia, and that could really be a catalyst for silver to move more than gold percentage-wise.
So, Scott, as we kind of continue along here, the last one I want to hit, and we kind of really touched it very quickly here, and I know I'm sending you across every asset class, but it sort of feels like there's sort of a ripple effect across the board of what we've seen, and that's moving to crude. And the reason why I'm interested in crude is I kind of made this joke a little bit to Sal Gabrady a little bit earlier, but it feels like crude just moved back into that $40 purgatory that it seems to have been in for a while from a trading standpoint. And I'm just curious, I mean, unless something comes out that's dramatic from a demand standpoint, it feels as though OPEC Plus and the U.S. can do whatever they want from a supply standpoint. At the end of the day, this is going to be a demand-based trade, and the demand just doesn't seem to be there. Are we going to hit a cap here with this little pop and the little run that it's seen so far in the last day and a half?
It has been a demand trade, and it's been a demand destruction trade for the better part of 9 months. And listen, with the news of the vaccine and everybody being optimistic and hopeful, as I am as well, that's great. But that doesn't mean that people are, bam, all of a sudden they're hopping in their cars and they're getting back to their offices. That's down the road a little bit here. So I do think that crude is capped out here. You called it purgatory, and I look at WTI and kind of see that exact same type of tight range that we see with the dollar, and quite frankly that we saw with gold also, and not trading out of that range. We're at the higher end of that range in crude right now. I'm a seller of it, quite frankly, and until the technicals, until the fundamentals prove me wrong, I'm going to continue to trade that range, and I just don't see how we break out.
So, Scott, before I let you go, I know you've got great insights in the market. You always have your fingers on the pulse. I'm wondering, after that day for yesterday, a little bit of, I would say, sort of a sideways trade, though the mid-caps seem to be really the ones that are popping here. What is your outlook for today that you're looking at? And if there's something maybe even a little further on the horizon that you want to have on your radar?
Sure. So in reference to the small and mid caps, and this is 100% transparency here. We were buying some put spreads yesterday in there because I think this ran way too quickly to the upside. And I could see a pullback in the Russell, especially back to where the prior resistance was, about 2 to 3%. Nothing humongous, but about 2-3% lower. So you look at these moves, JB, and just like we were talking about the moves in gold and some of the other space, the market doesn't really like these sharp back and forth moves. We want to see some consistency. So I think the small caps got a little bit too far. I think the NASDAQ is getting really interesting here on some individual names on this sell-off here. And that's really what I'm looking at. I'm looking at individual opportunity like that.
Well, Scott, I appreciate you for coming on, sharing great insights as always. Really love how you kind of look through at the markets, taking a very measured approach. And also what I say is thinking and saying to our traders, hey, be smart with what you're looking at and be also, defined in your risk. I think that's a great advice you always give. Everyone, that's Scott Bauer, CEO of Prosper Trading Academy, joining us.